Assalamualaikum. Our group will present about Malaysia Budget 2025.
On 18 October 2024, Prime Minister and Finance Minister Datuk Sri Anwar Ibrahim tabled Budget 2025, theme reinvigorating the economy, driving reform and prospering the rakyat. This was Malaysia's largest ever fiscal budget amounting to RM402,001 billion, split into RM335 billion for operating expenditure and RM86 billion for development project. It's aimed to foster robust economic growth projected at 0.5 until 5.5%, while keeping inflation moderate at 2% until 3.5%.
Why this matters? Because it set the tone for aggressive fiscal and reform policy aiming at long-term resilience. Next, signal Malaysia transition toward a higher value, innovation-led economy through strategic investment and digital transformation. Lastly, highlight balanced strategies aimed at reducing inequality while preserving social support.
The strategic tax measure under Malaysia Budget 2025 reflect the government commitment to a driving growth, innovation and sustainability economy. The first initiative for strategic tax measure is the expansion of sales and service tax for general businesses and consumer, which includes sales tax where an increase in rates for essential goods such as salmon, important fruit, luxury item. Service tax extended to business-to-business commercial services, including fee-based financial service. This burden the tax base and rise government revenue. However, it is also increased the cost of businesses, especially in sector depending on business-to-business services, which is the company will also need to adapt their compliant system to handle the expanded SST scope. Next, we have the government tax for high-income individual, where a 2% tax is imposed on local dividend income exceeding 100,000 per year. This tax reduces the net return on investment for high-income individuals. However, it may encourage reinvestment of profit into businesses, which boost long-term corporate growth, while broadening the personal income tax base that contribute to fiscal sustainability. Besides, to support digitalization, the government offer e-invoice incentive for all businesses that include accelerate capital allowance for ICT equipment and software, which fully claimable within 2 years. It will encourage businesses to adopt e-invoicing and align with LHDN mandatory e-invoice roadmap while improve compliance and operational efficiency. However, it is also a critical move to digitize tax system and improve data accuracy in reporting. Furthermore, to modernize Malaysian logistic infrastructure in logistic and supply chain industry, the government introduced a 60% investment tax allowance for qualified investment for in smart logistics with IR 4.0 technology such as artificial intelligence, Internet of Things and automation. This will encourage the firm to upgrade supply chain operations, support green logistics and carbon emission reduction while attracting more foreign direct investment in advanced infrastructure project. Lastly, in promoting an exclusive workplace that employer offering a remote or hybrid work, the budget includes an additional 50% tax deduction that capped at 500,000 for company implementing approved flexible work arrangement. Eventually, drive the adoption of remote and hybrid work models and support talent attraction while retention, particularly among younger and diverse workers. Simultaneously, it will align with ESG goals by reducing commute-related emission and promoting work-life balance.
Second initiative is empowering SMEs and startup through financing, where one of the government's strongest strategy to drive Malaysia's entrepreneurial growth. From 2022 to 2025, we can see a clear rise in budget allocation, with a sharp increase in 2025, showing a strong commitment to innovation and business development. To translate this into impact, several financing schemes have been introduced, which is the first one, the Halal Industry Financing Scheme, provides 600 million through BPMB and SME Bank, with up to 80% loan guarantee from SJPP. This help halal compliant SMEs expand their operation, secure certification and access global market. Second, the SME Loan Guarantee Scheme offers 20 million in loan guarantee, including 5 billion reserved for Bumi Putra SMEs. By reducing financial barriers, it makes it easier for banks to approve loans, giving more SMEs access to much needed capital. The third one, the Automation and Digitalization Facility under BNM allocates 600 million to support SMEs in adopting new technologies, with financing of up to 3 million per SME. This boosts productivity and efficiency through digital upgrades. In addition, the Technology Transformation Fund allocates 400 million to help MSMEs transition to Industry 4.0, encourage innovation and competitiveness. Finally, the Women Entrepreneur Financing Program channels 470 million through SME Bank, BSN, Bank Rakyat and MARA, expand access to capital for women-led MSMEs and supporting business growth. When combined, these schemes create an integrated ecosystem where SMEs can strengthen their foundation, startups can scale, and together they contribute to building a more competitive and resilient entrepreneurial landscape for Malaysia's future.
Now I will explain for the next initiative, which is the Driving the Green Economy (ESG) initiative. E stands for the environmental, and under environmental, there are 3 schemes that lead to a greater green economy. So the first one is Low Carbon Transition Facility, which is RCTF, a RM 600 million fund through Bank Negara Malaysia to help small and medium enterprises shift toward low carbon operation. Under the RM 600 million initiative, RM 100 million is set aside to assist SMEs in adopting a sustainable and low carbon practices in business operation, and this encourages SMEs to prepare for future-proof about carbon emission and enhance the eligibility with environmentally conscious multinational corporation. It attracts customers who care about the environment by reducing a long-term energy cost. And next is High Tech and Green Facility, RM 1.3 billion financing from Bank Negara Malaysia and Tekun Nasional for startup involved in green economy, digital technology, and biotechnology. This helps startup to expand business and invest in strategic sectors. This initiative helps business to form innovation in eco-friendly technology, supports the development of sustainable product, and support green business. And the last one is Disaster Relief Facility, DRF. Bank Negara Malaysia provide RM 300 million to alleviate the financial burden on SMEs affected by flood and enable them to continue their business operation. This aim to deliver low interest financing for business recovery. This initiative supports business continuity, reduce downtime after disaster, and ensure local economies recover quickly during climate events. Now, I will explain about the social aspect of ESG initiative. The first scheme is called Scheme Pembiayaan Perusahaan Sosial. This scheme targets social enterprise that need working capital and asset funding. Under this initiative, RM 15 million is provided as financing with a subsidized interest rate of 3% to 4%. This makes it easier for business with environmental goals to access funds. This business impact is that it enhances access for sustainable entrepreneurs, helping them grow while supporting both social and green objectives. The second initiative is called Sejati Madani, and it focuses on B40 groups, which includes low-income communities. The RM 1 billion fund is allocated to help vulnerable groups in rural areas by improving their financial capabilities. The impact is that it helps boost local economies, especially in Orang Asli areas, by funding projects that create group jobs and support self-sustaining income. This social initiative not only support financial growth for underserved communities, but also ensure that development is inclusive and environmentally responsible.
There are 2 initiatives for governance to driving the green economy. So firstly, Public Finance and Fiscal Responsibility Act (PFFRA). The initiative target federal government, ministry budgeting and development sector. A legal framework effective on 1st January 2024 that mandate minimum 3% of GDP allocated to development expenditure, next caps fiscal deficit at 3% of GDP, and set a statutory debt ceiling of 60% of GDP. It will affect the business because it is greater predictability in fiscal policy and encourages investor confidence and macroeconomic stability. Net subsidy regionalization, where this initiative focus on energy, transport, consumer goods, and low-income group by transitioning from blanket subsidy to targeted cash assistance using databases like Padu and IKASE, and ensure subsidy only go to vulnerable population. This initiative will reduce fiscal leakage and improve budget efficiency and equity.
And now we'll be sharing the key taxation incentive introduced under Budget 2025 designed to accelerate Malaysia digital transformation. This scheme target the high growth sectors like AI, cloud infrastructure and automation. The first one is Malaysia Digital Tax Incentive, a new investment. This scheme support the digital tech companies starting a new qualifying activities. Eligible business receive the 0% tax on IP income and 5 until 10% on non-IP income up for 10 years. Alternatively, they may claim an investment tax allowance of up to 100%. It stimulates a digital innovation and attract a global tech investors and strengthen the Malaysian leadership in emerging technologies like AI and cybersecurities. The next one is Malaysia Digital MD Expansion. Designed for the companies already hold the Malaysia digital status, this offers a 50% reduced tax rate or investment tax allowance of up to 60% on capital expansion. It encourages the companies to invest more and help them grow bigger and create more jobs in digital field. The next one is MDEC BSN SME Digitalization Grant. This scheme target the MSME by co-funding up to 5,000 ringgit for digital tools like accounting systems, CRM and cybersecurity. Its impact is lowers the cost of adoption for a small business and empowers their participation in digital economy. Now I pass it over to Aida, who will explain the next three schemes.
With the three remaining theme driving digital inclusion and infrastructure resilience, which is the first thing is Smart Automation Grant SAG Madani, targeting manufacturing and service industries. This grant up to 1 million for automation using robotic, LOT and AI. This impact it had enhanced operational efficiency, reduced manual dependency and accelerated transformation in traditional sector. The second thing is AR R&D double tax deduction, which is company conducting research in AI, robotic and emerging technologies can enjoy double tax deduction on qualifying expenses. So the impact is strengthens Malaysia R&D ecosystem, develop local expenses and enhance commercialization of cutting edge solution. And the last thing is digital ecosystem acceleration scheme, which is called the SAC. Offered via MIDA, the SAC provide tax incentive for building critical infrastructure such as data center, cloud platform and logistic tech. So impact it build a Malaysia digital backbone, attract foreign investment and support smart logistics. So to conclude all the 36 taxation same position, Malaysia to become a competitive digital nation by bridging fiscal strategy with tech innovation. Budget 2025 ensure inclusive, resilient and future-proof economic growth. That's all from me. Thank you. Let's move to the next slide. Is budget 2025 is business friendly? So the answer is yes. It provides strategic incentives, strong support for digital infrastructure and innovations, and a clear roadmap for AI governance and talent development. So strategic for areas of accelerating digital transformation is artificial intelligent AI leadership, digital infrastructure, cybersecurity, inclusive digital economy, innovation and R&D ecosystem. So what should business prepare for? So the first thing first is digital redliners, invest in digital tools, cybersecurity and cloud infrastructure. So the second thing is talent upskilling, train employee in AI, data science and digital literacy. And the third thing is compliance, align with ethical AI practice and digital ID frameworks. And the last thing is collaboration, partner with educational institution and government program for R&D governance and innovation. So the conclusion is Malaysia Budget 2025 demonstrate a forward-looking approach to economic resilience, innovation and sustainability. So with strategic tech, incentive digital transformation, support and ESG aligned initiative, it positions business to thrive in a competitive, inclusive economy. Companies must prepare by enhancing digital capabilities, upskilling talent, and aligning with evolving compliance standards to fully leverage the opportunities presented. So that's all from us. Thank you.